2021 proves to be the year of the cryptos, with $1.5 trillion added in market value. That's our main story this morning. Also today, the Prime Minister to convene a national cabinet meeting on the surging COVID cases, the Federal Treasurer cautious on immigration, and how Spiderman is saving Hollywood. It's Tuesday, the 21st of December 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat with Shehryar Antia from PGIM about the impact of technology disruption on the economy. But first, Sean, as I mentioned, cryptocurrencies are heading towards the end of the year, having added about $1.5 trillion in overall market value. Has any other asset class, Sean, done as well?
Oh, the glee in your voice when we report this story, Michael.
That's right. I'm almost gloating, even though I do not know enough about cryptos to invest, but I'm taking this as a personal victory.
Look, I think as a collective, no other asset class has done as well. Certainly no other major asset class. Bitcoin is up around 60% this year, but others such as Ether, Binance Coin, and meme tokens such as Dogecoin have done very, very well. In fact, Bitcoin's share of the crypto market shrank dramatically this year, according to Bloomberg, and analysts forecast that will continue into next year. That's because there are so many more cryptos in the market gaining support, notwithstanding some of the warnings from regulators throughout the past 12 months. The total value of the crypto market is now $2.3 trillion, having started the year at just $800 billion. Bitcoin has about 39% of that market, and Ether has 20%. In terms of asset classes, cryptos has outperformed pretty much everything else. Gold and global bonds are lower so far this year. Global equities are up about 13%, and commodities as an asset class are up around 23%, though of course some individual commodities are much higher and some are much lower. Now these figures are all from Bloomberg. Cryptos are up 163%, even though many of them are well off their highs. Bitcoin, for example, is trading 30% below its peak in early November. Michael, without a doubt, 2021 has been the year for cryptocurrencies.
So when I keep saying every week, Sean, that we should do more about cryptos this week, you smell that? That smells like vindication.
Yeah, that's all right. Smell doesn't work on an audio podcast, by the way.
Oh, works for me. All right, so how did markets perform yesterday, Sean?
Well, the S&P ASX 200 closed down 0.2% to 7,292 points. National Australia Bank, Macquarie Group and ANZ all fell by more than 1%, while Fortescue Metals was up 2.5%. Some of the healthcare companies did really well. Sonic Healthcare, Fisher & Paykel, Ramsay, as well as companies like Xero, Newcrest Mining and Coles, they all did pretty well. But the energy groups fell alongside lower oil prices, with Santos off 5% and Woodside nearly 3% lower. Interestingly, Santos is now the biggest oil and gas producer in the country. Since the merger last week, it's now bigger than Woodside. Also, Michael, figures from EY released yesterday show that global initial public offerings hit their highest level in 2 decades during 2021. Almost 2,400 deals globally raised nearly $640 billion. That's Aussie dollars. The ASX was home to 197 floats, raising nearly $13 billion, the fourth highest among global stock exchanges, and that pretty much was fueled by record commodity prices. About half the floats on the ASX were of materials companies. The Nasdaq on Wall Street was the number one bourse for IPO deals this year, with 308 listings, raising about $135 billion.
And speaking of Wall Street, what's happened in overseas markets overnight?
It was a pretty rough session. All the major indices on Wall Street were down around 1.7% in early afternoon trading on the back of fears about the Omicron variant and the rejection of President Joe Biden's $2 trillion spending package. European markets were also sharply lower as economies across the region reintroduced restrictions. The Aussie dollar is trading at 71.2 US cents. Oil prices fell nearly 4% overnight, reflecting concerns that global growth will slow, and Brent crude is now trading at under $71 a barrel.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, there's plenty of stories around this morning. Prime Minister Scott Morrison has convened an urgent national cabinet for today as COVID cases surge across the country.
That's right. Certainly politicians are starting to get worried. New South Wales recorded its third straight day of around 2,500 cases, but Premier Dominic Perrottet said he didn't want to kill confidence in the economic recovery. Not sure that he has to, because I think Omicron is doing that. He did leave the door open for future restrictions, though. Mr. Perrottet said people had to learn to live in a world with COVID in it. Victoria recorded a little over 1,300 cases. South Australia announced 105 positive cases, and there were 49 locally acquired cases in Queensland. Tasmania recorded 3 new cases, and Michael, it was a big day for the Northern Territory yesterday with its borders reopening. All the talk of Omicron certainly is scary, so I went looking for some good news, and I'm going to provide that one. It's just a little touch of hope. The sharp spike in cases in the first South African province to report the Omicron variant has well and truly peaked, and it's trending downwards. Now, that's triggered hopes that the highly contagious variant may actually produce a much, much shorter outbreak. Cases in the Gauteng province in South Africa are now on the decline. Don't know whether we can read too much into it, but we'll grab any good news at the moment, certainly in the run up to Christmas.
Yeah, we certainly will. That does sound at least a little bit promising. Now, Sean, Treasurer Josh Frydenberg wants to boost the number of migrants to Australia, but he won't be rushing to take anyone.
That's right. Mr. Frydenberg told the Financial Review that immigration needed to be measured, considered and targeted. It comes as the Business Council of Australia, the Australian Chamber of Commerce and Industry and the AI Group called for big jumps in permanent migration. But Mr. Frydenberg, wary of an election next year, needs to tread the political path and debate that large-scale immigration triggers. His comments came as the government released its 2021 population statement, which shows the impact of COVID-19 and how it's impacted different parts of the country. All states in the ACT are forecast to experience a drop in population growth as a result of the pandemic. Only Northern Territory will have grown. Net overseas migration last financial year was minus 100,000. It will be minus 41,000 this financial year and then 180,000 next financial year, according to the population statement. Now, that's still below its pre-pandemic level. Business is keen to push the numbers higher in an effort to address skills shortages in the economy. The population statement says Melbourne is projected to be the fastest growing capital city from 2023-24 and will overtake Sydney as the country's largest city with a population of close to 6 million people around the turn of the decade.
Okay, now, Sean, on Friday afternoon, shares in one-time star fund manager Magellan went into a trading halt ahead of some bad news. The bad news came through yesterday and it was a pretty tough day for Magellan.
Sure was. Its share price tumbled 33% after UK wealth manager St James's Place pulled its money from the group. The reason? Poor performance. Magellan said the decision to pull the mandate wouldn't hurt earnings significantly. Maybe, but it's a really bad look for the fund manager. It was the largest institutional mandate for the fund manager run by Hamish Douglas. About 12% of Magellan's funds have now disappeared. The fund manager has been a poor performer in recent months, and its share price has reflected that. In fact, it's dropped from more than $70 a share just before the pandemic to around $20 a share today.
All right. Now, global miner Rio Tinto will get a new chair from May next year, Sean.
Yes, Dominic Barton, a Canadian that spent 30 years at McKinsey & Co, will replace Simon Thompson, and it ain't an easy job. Remember, Mr. Thompson has served as chair of Rio for 4 years during some of the toughest times for the miner, including the Yukon Gorge explosions 18 months ago. Mr. Thompson said he wouldn't seek re-election at the group's AGM in May next year because he was ultimately accountable for the failings that led to the destruction of the sacred Aboriginal site. Mr. Barton has been Canada's ambassador to China, so it's clear where Rio's heading.
Okay. Now, Sean, Australia's top 20 digital advertising spenders outlaid around $400 million this year.
Yes, the biggest spender was Procter & Gamble, which sells brands including Oral-B, Gillette and Olay. It spent about $30 million, according to Pathmatics. Procter & Gamble tapped into the strong demand for home cleaning and hygiene products. Now, next in line was PepsiCo, then Telstra and Singtel and Optus. Number 5 in the pecking order was Mondelez International, which maybe you haven't heard of, Michael, but you would know their products. Oreos, Cadbury, plenty of lollies, and my personal favourite, Toblerone.
Hang on. Your personal favourite is Toblerone?
Well, I'm being influenced by other people on the Fear and Greed team.
Oh, yes, and you are also now 85 years old. Carry on.
Thank you very much. Mondelez spent nearly $24 million this year in digital advertising. Overall, the top 20 includes fast food brands like Yum Brands, which is home to KFC, Hungry Jack's and Menulog. Woolworths and Coles make that list. So too the Commonwealth Bank, Insurance Australia Group and the New South Wales Government. All names that we've been watching all year.
Okay, Sean, what's making headlines in today's news media?
The Financial Review is reporting that Nine Entertainment has signed a $650 million 5-year deal to broadcast the National Rugby League. The value of the rights is back to pre-pandemic levels. The Fin is also reporting that COVID has added a collective $24 billion to New South Wales and Victoria's budget deficits, while net debt across the country's 5 largest states is now forecast to hit $351 billion.
Running through a few of the other stories around today, and fears that diesel would run out after Christmas have lessened after the federal government struck a deal with fertiliser manufacturer Intertech Pivot to deliver supplies of refined urea, which is used to help produce the diesel exhaust fluid AdBlue. At one point, there was only 6 weeks' supply of AdBlue left. AdBlue was added to diesel to reduce emissions, but crisis averted for now.
Viva Energy expects earnings this calendar year to double from last year despite third quarter lockdowns in the ACT, Victoria and New South Wales. The group said it has had strong fuel sales across both its retail and commercial segments. Its share price was up 3.7% yesterday.
There are a few small deals worth mentioning yesterday, Sean. Origin Energy said it would acquire community energy services business WinConnect from Pacific Equity Partners for $42.4 million. And private equity Brookfield will take a $1 billion stake in Australian smart meters business IntelliHub, which is already owned by Pacific Equity Partners. Gold miner St Barbara will pay $157 million for Bardock Gold at a 29% premium to Bardock's last close. Bardock has fields in WA. And OFX Group has bought global foreign exchange provider Firma Foreign Exchange Corporation for $98 million. A bit of a flurry of activity.
It sure is. They just keep coming ahead of Christmas. Finally, Michael Simic's share price fell more than 13% yesterday after a report in the Financial Review claimed that the country's biggest construction company was being accused of broken promises and millions of dollars in unpaid wages after its exit from the Middle East. Simic said it knew of no reason for its share price tumbled yesterday, except for the Financial Review report.
Strange one, that one. What's the key overseas news this morning, Sean?
Well, China's banks have lowered borrowing costs for the first time in more than 18 months. Now, that's because Beijing is trying to boost the world's second largest economy, and that should be good news for the Australian economy. Elon Musk, Michael, it has been a few weeks since we've spoken about the world's richest man. Anyway, he tweeted he'll pay more than $11 billion in taxes, which will probably be a record payment to the US tax office. This follows his decision to hold a poll on whether he should sell 10% of his Tesla stake. The poll said yes, and he's been selling ever since and racking up a capital gains tax bill along the way. There's an interesting story from Reuters. It claims that Amazon's efforts to curry favour with the Chinese government included quieting criticism of President Xi Jinping's book on its Chinese outlet. And finally, Sony Group's Spiderman, No Way Home, is setting box office records. In North America, the film had the second highest opening day ever, just behind Avengers Endgame. Ticket sales on Friday last week totaled $121.5 million US, just what the industry needed. For the weekend, sales were $253 million US. An interesting statistic, Michael, over the 3 days, Spiderman took more money than any movie made throughout the whole COVID period in the US.
Well, all those people predicting the demise of cinemas during the pandemic might well be proven wrong by this one, Sean.
They sure will, and that's what the great hope for Hollywood is.
Yeah, that's great news. Up next is the Daily Interview, and today you're speaking to Sheriar Antia from PGIM.
Yeah, we talk all about how technology will change work practices, the sorts of jobs we'll do in the future. Really interesting projection of what the world would look like in the next 5, 10, 20 years.
Yeah, he's a really interesting person, a lot of experience.
Absolutely. He worked at the Federal Reserve under Janet Yellen for quite a few years, so he knows his stuff.
Yeah, certainly does. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Thank you, Michael.
It's Tuesday, the 21st of December, 2021. Make sure you're following the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.